Ooh, listen to that good old Drew Hill. Those my boys. Anyway, hey y'all, how y'all doing? Coming at you live. Gotta make a quick run. Try not to melt.
Please drive to highlighted route.
I might have to turn her down because I think I'm pretty sure I know where I'm going. I'm gonna turn her off for a second. Okay. That being said, how y'all doing today on this arriving Thursday? Sorry about the camera, but y'all know the deal. If you're watching me live, throw a one in the chat. If you are watching a replay, throw a two in the chat. And I'm always gonna come to y'all with some good info. Okay, so how y'all been? Okay, I haven't come to y'all as much as I used to. I'm gonna make up for that, y'all. I'm gonna start going live more often with nuggets and gems and diamonds and all that good stuff. But yeah, give me some ideas to talk about, y'all. Because if not, I'm gonna talk about what I want to talk about. Okay. All right. So with that being said, what we're gonna talk about today is I'm gonna talk to you a little bit about the five factors of your credit, right? Five factors of your credit score. Now, it is a formula, okay? But what I do need you to understand is your actual credit report is what dictates your credit score. But there's a whole lot of variances with it too when it comes to your credit. And, ask me some questions. I'll try to clear some things up as well. But I'll start there. So is the biggest part of your credit is payment history. Okay? And what's most important is the last 2 years. So are you looking to like purchase a home, a car, anything of that nature? But what's most important is the last 24 months. Payment history makes up 35% of your credit score. And I need y'all to understand, I need y'all to understand when it comes to late payments. If you ever have one late payment or two, however many late payments you ever have, and let's say you catch the account up, those late payments are still there, okay? And one late payment that bruised the mark is still there on your credit. And late payments continue to affect your credit every 30 days. All right, so that's why it's important. So number one, pay your bills on time. So pay your bills on time. Put your stuff on automatic pay. Put the minimum on automatic pay. Now, of course, I'm not advocating for you to just pay the minimum. No, never. But put your stuff on the minimum to have it paid so you don't get a late payment bruise, okay? Because late payments chop you up. They chop you up really bad. So that's really important, guys. Pay your bills on time, okay? All right, and then the next biggest chunk of your credit is 30%, which is credit card utilization. This is not the same thing as debt to income ratio. Okay. I have people say, oh, yeah, my debt to income ratio is too high, so my credit score is low. No. Your debt to income ratio does not affect your credit. Well, indirectly it does, because of course, if you got too much debt and you don't have enough income to pay your bills, then yeah, that's why people end up with bad credit. But what I'm talking about is like what's measured when you go to like purchase a home or rent or something of that nature. No, people confuse credit card utilization and debt to income ratio is the same thing, and it's not. So utilization specifically speaks about credit card utilization. So we want you to stay under 30%, right? 30% is cool. But please understand that that actual 30% is the sum of all of your credit cards. So you're going to take the sum of all the balances of your credit cards and the sum of all your limits of all your credit cards, and that's going to give you the percentage of your utilization. If it's at 30%, 30% is okay, but we really want you to be under 10. That's how you maximize your credit when it comes to that portion, and that's 30% of your credit score. So that's a really big chunk. And please understand, high credit card utilization is equivalent to having bad payments, late payments. Excuse me. Okay. So keep those credit cards down. And if your credit cards are high, if you have high credit card utilization, that is an indicator that you need to make some more money. So y'all know that means y'all need to holler at me, right? Right. So yeah, high credit card utilization means you need to make more money. That's all. Okay. So so keep the credit cards under 10%. That's how you maximize it. Under 5 is the best. But keep them under 10%, not 30%. Like you hear everything. You do not want to keep all your credit cards at 30% because you're going to end up overall utilization higher than 30%. All right. So the next is 15%, which is the length of your credit history. So when it comes to any of your accounts, that's 15%. How long you had these accounts? That's 15% of your credit score. So if you're like me, technically your credit started when you went to college because you took out student loans, right? So taking out the student loans, that started because student loans are personal loans. So for most of us, that's where our credit started. Then you probably got a credit card. We went and filled out the applications, got the free pizza. Y'all know what I'm talking about. But anyway, but yeah, the 15% is your account history. And guys, old credit is good credit. Do not close out these old credit cards. And I understand you don't want the credit cards no more, but when you close them out, you're hurting yourself. You're hurting your credit scores. So with that being said, keep your credit cards open. Just pay them. If you don't use them much, you still need to use them at least every 6 months or they'll close out on you. Okay, I made that mistake. I actually made that mistake with Chase because and now I'm kicking. I paid it off and I put it in a drawer or something and went back in the drawer one day and saw it. And then, of course, went back to my credit report and saw that it was closed, which I'm sorry about because I wanted to use Chase for business as well. And Chase is a very, when you have more relationships with a bank, meaning you have more lines of credit and stuff with them or in different bank accounts and stuff, you don't go through as much underwriting as for somebody who doesn't or is very new. So I was very sorry because Chase is one of the big boys, right? One of the power banks of the country. Okay, so we talked about 35%, 30%, and 15%. Now we're going to talk about 10%, which is inquiries. Okay, new credit. So anytime, of course, that you are applying for something, and if they're doing a hard pull, then that means that they are. It's going to show up on your credit. And guys, I'm seeing upwards of 50, 60, and 70 inquiries on people's credit reports applying for stuff. And the biggest snake of that are car dealerships. Why? Because what they don't tell you is that they're going to run your credit for each lender, each bank that they're trying to get you a loan for. I've seen so many inquiries because of that, and it's hurting your score. Every time you apply for something that's doing a hard pull, it's knocking your credit score down a couple of points. So multiply that 2 to 3 points by 50. Okay? Think about that. That's a lot. That's anywhere from 100 to 150 points just for applying for something that you already know you're not qualified for. So, if you're in the territory like, oh, we know you're gonna need a co-sign and stuff like that, go work on your credit somewhere, okay? Because co-signing for people is not ideal at all. But yeah, so new credit. If they take your full social security number, it's going to be a hard pull. If they take just the last 4 digits, most likely it's going to be a soft pull. And guys, we get our credit soft pulled all the time, in case y'all don't know. And also I want to clear up the myth that checking your own credit knocks your score down, messes with your credit. It does not. You can look at your credit as many times as you want. Okay, so I want to clear that myth up too. So the last 10% is the types of credit that you have, credit mix. And the two major parts of types of credit is revolving and installment accounts. So revolving accounts are credit cards and lines of credit because basically you use them like a revolving door. Okay. And meaning you're going to use them, pay them down, use them, pay it down. It's kind of, circular motion, round and round, revolving. Y'all get me? Okay. And then the installment accounts are accounts that actually have the same payment each month. And what are those? Like your car notes, your student loans, your personal loans, like those type of loans like that. You're paying the same thing every month. And as we know with a credit card, they can change each month. So that's how you know that's revolving installment, same payment each month. And having a mix of those, that's 10% of your credit, guys. So those are the things that make up your actual credit scores. 5 factors to your FICO score, and that's the only score that matters. Now, if you see 6 factors, like what you see on Credit Karma, Credit Sesame, Credit Wise, those are Vantage scores, and don't nobody use those. Okay, so anytime you see 6 factors, that's a Vantage score. 5 factors, FICO score. Okay, you need to know that 35, 30, 15, 10, and 10. That's what you need to know. So there are alternative lines of credit as well that you can add to help beef up your credit report and help you increase your credit scores. And these things, I don't know how long these things been around, but they're very innovative. You can add your rent to your credit report. You can add things you pay subscriptions for, things of that nature. Also, being an authorized user on somebody's card. But remember that you as the authorized user, you need to be on somebody's card who is responsible. Responsible. Do not get on somebody's credit card who make late payments and have high credit card utilization. You are hurting yourself more than you're helping yourself. Okay? Make sure that person is responsible. If you don't have a responsible person in your life, that's fine. Get a secured card. What is a secure credit card? It's a credit card that you can use. You can't use it until you put down a security deposit. Security deposit. Security deposit. Secured card security deposit. And I've seen people on social media saying, oh, you got to put money down and use a credit card. Oh, that's a scam. No. Let's stop being ignorant, okay? When you cannot get a regular unsecured card to help you increase your credit, you get a secured card. Depending on the product, you may need to put down at least $200, $300. Some people like to put down a little more. If you can put down a little bit more, please do. And then use it for small stuff, okay? So I want to clear that up. Secure credit cards are not scams. And please understand, if you don't know, you're going to learn today. Strong credit profiles include credit cards. Okay? So if you know someone, or if you are someone with really no debt on your credit report, no derogatories, and you wondering why you can't get above a 650, it's because you need credit cards, sweetheart. So if you think you want to get to the 750 and 800 club, you need credit cards. And don't use them much. And whatever you use, pay it off. And also when it comes to your credit cards, pay those bad boys off by the statement date or the closing date, not the due date. All right. So do me a favor. If y'all have learned something so far, put some fireballs in the chat for me. Put something in the chat. Let me know y'all hear me. I know some of y'all there. I see y'all thumbs up and everything. But these are the things that you need to know. Just little simple stuff. You could do something simple today to help you get an increase for next month. But yeah, for those of you who don't like credit cards or you was told credit cards was the devil, which I know a lot of us was told that, they're not. If you treat them good, they're going to treat you even better, okay? Because ain't nothing like the rewards points and taking flights for pretty much for free because I've already spent $1,000 or $2,000, whatever I spent. And because I got those points, now I'm flying somewhere for free because I'm using the rewards points instead of my own money. That stuff comes in handy, guys. Trust me when I tell you. Right? Hotels. You can do the same thing with hotels and stuff like that. And for those of you who want businesses, you want business credit and stuff, somebody lied to y'all talking about your personal and your business credit is completely separate. It is not. Okay? Because think about it, just common sense. You as a person, now you have a business. You have an EIN, you got an LLC, S Corp, C Corp, whatever you have. And you go to the bank with bad credit. And you want something for your business. You want a credit card for your business. You want some business loan, something like that, and you get turned down. Think about it. If you didn't handle your business, if you were not responsible as a person, as an individual, why as a lender or as a bank, why should I give you any money? You're going to do the same thing. Okay, so just think about that logically, it makes sense. So yes, the foundation of your business credit is your personal credit. Matter of fact, the foundation of your entire adult life is your personal credit, because it determines the direction of your adult life. It really does. So I don't see any questions or anything. Y'all got any questions? Y'all can throw something in the chat, in the comments. I will answer your questions. You can inbox me with some questions. I will answer them. But yeah, but just know that remember, bad credit, anybody can come back from it. Between credit repair, credit restoration, and continue to be responsible. See, don't be in credit repair and still paying your stuff late, still paying your bills late. You're hurting yourself. You're shooting yourself in the foot, you know? So don't do that. You have to continue to be responsible. You have to continue to pay your stuff on time, keeping the credit cards utilization down. Those are the two biggest things. Don't be applying for a bunch of stuff while you're in credit repair. Matter of fact, if you're currently in the process of credit repair or thinking about doing credit repair, don't do nothing with your credit unless you run past your consultant first. Okay? Do not do that. And I'm saying these things, I'm speaking from experience, guys, okay? So if any of you guys are on here, you need help with your personal credit, your business credit, you want some funding for your business, for your business as well, listen. And that's another thing. If you have a business and you need some funding and your personal credit is not the best, but your business is making money, I can get you some business funding, okay? But I'll tell you, the person with the best, listen, because let me tell y'all how much good personal credit will do for you. Let's say you got a new business, new LLC or whatever. Your credit is good, 700 and up, no blemishes. Your business is new. You're not making no money yet. Guess what? You can still walk into the bank and get you $50,000 with some type of funding. You can. I've helped people do it. Okay. So with that being said, like I said, if you need assistance, y'all know how to get me, inbox me, comment under here. You can text me at 215-558-6163. Text me that number. That's how you can get to me, guys. You know, I am easily accessible. Trust that you guys are having a great Thursday. The weekend is about to be here. I can't believe June is done, guys. Half of the year is gone. It's going by so fast, it's ridiculous. Like, and the older we get, the quicker it's going. Plays no games out here. So I trust that you learned something by the things that I said. And you know, you need some insight, some guidance, I'm here for it. Okay. So other than that, y'all, happy Thursday. You need some help with your credit, hit me up. I'm here for it. I'm here to help you reach your goals financially. And we're going to talk about more than your credit. Trust me when I tell you. Okay. All right. So have a great Thursday.